environment where all understand whatever that is being taught. Father, may you protect us even as we study. May you guide Prof even as he teaches us. May you give us wisdom, knowledge, and understanding to be able to comprehend whatever that is being taught. And above all, we shall say thank you and glory be unto your holy name. In Jesus' precious name we pray. Amen.
Amen. Okay, so let us begin. Yes, Mark 2025, question 1. Yeah, see, it's on the teaching hospital, subvented entity. It said the trial balance below relates to Hamlet Teaching Hospital, a public hospital. So you have government subvention, outpatient service fees, blah, 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 blah. And you look at the requirement of the question. The requirement says we should prepare for Hamlet Teaching Hospital, statement of financial performance for the year ended, statement of financial position, and a note to the financial statement. And I'm saying that anytime they ask you for notes, if the question specifically asks you for notes, then you must prepare to write the notes. And so before you answer the question, all the items in the trial balance, you must try and identify where they fall. You must try and identify where they fall. So let us look at them one after the other. You can write short names beside it to tell you where they fall and where you use it. Okay. Now, this is a subvented entity. So their revenue will comprise of what? Let's see their revenue as a rough work. My board is not showing. Let me see. Okay. So let's see their revenue. Yeah, a subvented entity. What would the revenue be made up of? Someone should tell me, what should the revenue be made up of?
Government subventions, IGF, and grants and donations.
Government of Ghana subvention, IGF, now we have donations and grants. Okay. We have donations and grants. If there is any revenue, you don't know where to put it, you can put it as other revenues accepted. Then what about the expenditure? What about the expenditure?
Employees. Goods and services.
Compensation of employees,
Goods and services.
Goods and services,
Consumption of fixed expenditure.
Consumption of fixed capital. Consumption of fixed capital. Interest. Subsidies.
Social
grants expenditure. Social benefits.
Other expenses.
And then other expenses. And I'm saying that in most cases, they may not have subsidies, they may not, or they may not have social benefits too. So as you are working, you look through the question and then identify them. So let's look through the question, the trial balance, and then identify these items and are having fallen under one of these or the statement of financial position. Government subvention, where will you classify it as? Under government subvention, right?
Yes.
So you can put in bracket beside it and write GOG subvention. Now this is a hospital, so outpatient service fees is a revenue, and that will be IGF, right?
Yeah.
Inpatient service fees, IGF.
IGF.
Development partner grants, is on the credit, so it's a revenue. That's donations and grants. That's donations and grants.
Yes.
Then established post salaries, that is compensation. Casual
Yeah.
labor, that is compensations. But contract appointments, both local and foreign, you treat that as goods and services. Exactly. When it is a contract appointment, like the person is just appointed for a short while and go, we treat it as an expense. So that is administrative expense, goods and services. Limited engagements, compensation. Now rent, you can see that there is a debit one and a credit one. So the debit one will be an expense, right?
Yes.
That will be goods and services. And the credit one will be a revenue. That is IGF. Are you getting it?
Yes.
The debit one is an expense. The credit one is IGF. Insurance, goods and services. Consultancy services will be goods and services. Conference, workshop, and training, goods and services. Purchase of drugs. So the purchase of drugs and purchase of medical consumables, we will use that one to determine the inventory used. Are you getting the point?
Yes.
So those two, you can put a bracket over them and write inventory. That's inventory used. Are you getting it?
Okay.
We'll use them to determine inventory used. Then office expenses, goods and services. Repair and maintenance, goods and services. Interest on loan, that is interest. Is that clear?
Yes.
Interest on loan, interest. Pharmacy sale, IGF. Diagnostic, IGF. Mortuary services, IGF. Cafeteria and canteen, IGF. Extension fees, IGF. Furniture and office equipment, medical equipment, motor vehicles and land, all that are non-current assets. So you can put bracket over them and write non-current assets. Bank and cash is a current asset. Is that right?
Yes.
Receivables from National Health Insurance, that's receivables. Receivables from patients is also receivables. Payables is payables, a current liability. Loan from a foreign institution, this is a loan. So that becomes what? A debt, right?
Yes.
The non-current liability funds. It's a liability, so you can write liability funds. Liability, funds and liabilities, you put it there. Inventory of drugs and then inventory of consumables. Those are the opening inventories, right?
Yes.
So put that one into brackets and write opening inventories. Put that one into brackets and write opening inventories. Then accumulated fund. Accumulated fund is on the credit side, so it's positive, right?
Yes.
Then you have other expenses, which is other expenses. And so we can now go to the footnote. Now, for you as students, anytime you are writing the exam, you are supposed to show your financial statement first before your workings. So you leave one full page for the revenue and expenditure, that's the financial performance. Then you leave another page for your, statement of financial position. Then the third page, you can start your notes over there. Since they are asking you for notes, you can start the notes over there. So let's prepare the notes. So leave your first page for the statement of financial performance. Leave your second page for the statement of financial position. Then the third page, let's begin the notes. Now, if you're writing the notes, the note one must always be what we call compliance. Compliance. So note one, you title it compliance. Compliance. Now listen, this financial statement we are preparing, we always prepare it to meet three main laws. What are the three main laws? What are the three main laws by which we prepare the financial statements to meet?
The IPSAS, the PFM
Hey,
regulation.
the rest of you who are not talking, are you not part of the class? Yes, my sister, speak to us. Speak to us. What are the three main laws? IPSAS and what?
PFM regulation. The PFM.
The Public Financial Management Act and then the Public Financial Management Regulation. Are you getting it? Are you getting it?
Yes, sir.
Good. So you start and say under compliance, you write The financial statements have been prepared in compliance with international public sector accounting standards. Please write. The financial statements are prepared in compliance with international public sector accounting standards. That is IPSAS. The Public Financial Management Act. Now, the Public Financial Management Act is in which year? 2016, right? 2016, that's Act 921, right?
Yes.
Act 921. And the Financial Management, the Public Financial Management Regulations. The Public Financial Management Regulation. The Public Financial Management Regulation was in which year? That is LI 2019, 2019. The Public Financial Management Regulation 2019, LI 2378. Call it LI 2378. The Public Financial Management Regulations 2019. So the Public Financial Management Regulation 2019, that is LI 2378. So that is the first aspect, compliance. So you call this A is the compliance. Now B, basis of accounting. B, basis of accounting. B should be the basis of accounting. Basis of accounting. So under basis of accounting, you also state that the financial statements are prepared on accrual basis. On accrual basis of accounting, where transactions and events are recognized in the period in which they occur. In the period in which they occur. And not the period in which cash is received or transferred. The period in which they occur. And not the period when cash is received or transferred. When cash is received or transferred. I believe you are writing.
Yeah.
Are we writing?
Yes,
please.
The moment they ask you for notes and they attach marks to it, that marks is very, very important. Now, the strategy I'm adopting for you is to make sure that when it comes to preparation of financial statement, that 20 marks, at least if you can't get at all, make 18. Then you go to interpretation to another 20 marks. If you can't get at all, you make 15. So if calculation alone, you've gotten 18 in preparation, you've gotten 15 in interpretation, that is about 33 marks. If you are lucky and they add any other calculation to it, fine. If they don't add any calculation to it again, the calculation alone has given you 33 marks. Then you go to the standards. The standards is also 20 marks. If you go and get even 10 from there, it makes it 43. Before you look for you work out for the theories, because the theories in PSA, there are so many to the extent that if you are not careful, the theories can fail you. I hope you know that.
Yes.
The theories may easily fail you because there are many. So as a smart student, you master the 60 marks, which is the calculation, to make sure that you can get, if you can even get 15, 15, 15 for all of them, that is 45 marks. You just need a little of the theory to go through. And that little of the theory, you can get it from PEFA. You can get this from PEFA and then business of accounting, recognition of this account, what do you call it? The duties of the financial officers and those things. There are some areas that automatically there is always a question on it. You just memorize those areas and then read over your notes and go and sit down. So B, that is the basis of accounting. Now C, you talk about cost measurements.
Recording in progress.
Cost measurements. Yes, cost measurement. So you explain that all assets are measured at historical cost. Historical cost. Apart from donated assets that are measured at fair value. So all assets, we measure them at historical cost, apart from the donated ones, which we will measure at fair value. Is that clear?
Yes.
Then the next one, you talk about valuation of inventory. Valuation of inventory. Valuation of inventory. So valuation of inventory, there is a standard on inventory. The standard is it's as 12. Are you aware?
Yes, sir.
So you say inventory is measured in accordance with IPSAS 12 inventory, where inventory held for resale is measured at the lower of what?
Costs.
The lower of cost and what? And what? Net realizable value. Net realizable value. And inventory held for use is measured at the lower of cost and what? At the lower of cost and what?
Replacement value.
Replacement cost. Is it a net responding?
Yes, Philippa.
Okay, I thought it's a net. Okay, so inventory held for use is measured at the lower of cost and replacement cost. Then the last one, E, you talk about consumption of fixed capital. Consumption of fixed capital. So that one, you copy what is in the footnotes directly. Consumption of fixed capital. So you copy what is in the footnotes for them. So what is in the footnote? Let's go and see. Yes. Then you explain that consumption of fixed capital is charged on straight line basis. Consumption of fixed capital. Consumption of fixed capital is charged on straight line basis. on straight line basis as follows. So you can copy that table. You can copy that table and then paste it. You can copy that table. So you can take the non-current assets and the useful life. The non-current asset and the useful life. Yeah, so furniture and office equipment, you write it in full, 5 years. Just copy what is there, 5 years. Then we have medical equipment and accessories, 4 years. Then we have motor vehicles. Motor vehicles, 5 years. And then we have buildings. Buildings, 10 years. Are we okay?
Yes,
Are
sir.
we okay? Please, are you okay with the notes?
Yeah.
Yes.
So then your workings for the calculation can begin from note 2. Your workings for the calculation can begin from note 2. So we can begin our workings from note 2. Then we go to the footnotes. It's always better to tackle all the footnotes first. Yes. The first one is the usual pro forma. They are telling us the basis upon which it was prepared. So you see, you have in the notes, if you want to remember, the A and B, you have the two of them here. The hospital prepares the financial statement in accordance with IFSA's Public Financial Management Act and Public Financial Management Regulation. That one will be A. Then the B will be, and they're giving you the rest, and the current chart of account. Then the B will be the basis of accounting, which is the accrual basis. Before the C, you come to what do you call cost measurement. Before the D, you come to valuation of inventory. Then the E, you come to consumption of fixed capital. So it should be easy for you to memorize. Is that clear?
Yes, sir.
That
Yes,
format is
sir.
very important. The second one, let's look at this. The development partner grants received from the healthcare fund, an international organization that provides free medical care to the rural, poor, and vulnerable individuals, are typically unconditional. They said they are unconditional. However, 40% of this year's grant is subject to certain conditions which had not been met as at December 31st, 2023. So the grant we see over there, 40% of the grant is actually conditional. So since you have not met the condition, you cannot recognize that grant. Is that clear?
Yes.
You cannot recognize that grant. You must what? Defer the grant. So you defer it so that if you meet the condition now, then you can now do what? Recognize it. Are you getting the point? Are you getting the point?
Yes, sir.
So you can take development partner grant. So you can take development partner grant and open an account for it. Development partner grant. Look through the trial balance and give me the balance of that. And see it.
16,000.
16,000, right?
Yes, sir.
Yes.
Your development partner grant is 16,000. Then I can take the 40% conditional out, right? So 40% conditional, that will give you what? 40% of 16,000. What is that giving you?
6,400.
So 6,400. You take that out. So this 6,400, you treat it as an advance grant. Are you getting it? Like a payable. Is that clear? Is that clear?
Yes, sir.
You treat it as a payable. And so let us go look through the trial balance. If there are payables of, look through, if they are payable, what are the payables itself that is there?
Pay, pay, hours.
26,000.
So,
Bishop, will it be a receivable or a payable since it's on the credit side?
You said since it's on the, yes, it's a revenue. So when you have a
Yes.
revenue
Yes,
treated in advance, what do you recognize it as? Revenue that you've collected in advance.
Liability.
Current liability.
It's a liability. Are you getting the point?
Yes, please.
Like
I get it.
it's like a loan. If you don't meet the condition, you have to pay it back. So you treat it as a liability. Are you getting it?
Okay,
Yes.
okay, thank you.
Good. So you can treat that one like I told you last time. Normally, the payables in there, they refer to it as trade payables. Are you getting the point?
Yeah.
So you treat this as a separate line item. You can treat it as a separate line item under the liabilities. Are you getting it? So what's the
Yes.
balance? When you take that 6,400 out, what's the balance?
9,600.
The balance I'm at 9 what?
969.
9,600. So when we get to liabilities, remember that we have a certain liability here, 6,400. So you can put liability in brackets here so that you remember. So we call that one deferred. We have deferred it into the future, so like a deferred income. In fact, this is why, let me relate this to financial reporting. You see financial reporting, IAS 20, government grants, is that clear? Government grants. If you receive a grant and then part of the grant relates to a future period, what do you do? When you recognize the current year one in P&L, the rest of the grant, you defer it as a deferred income. Is that clear?
Yes.
And it becomes a liability. Are you getting the point?
Yeah.
It's the same principle. So let's look at working trade. We have some also there. Okay, so let's deal with this. Once we've dealt with the development partner grants, let us go and recognize it where it's supposed to be. The development partner grant is supposed to fall under donations and grants. Is that not so?
Yes, sir.
So donations and grants, you can put that development partner grant, which we've worked in working 2, and then we got 9,600. You can put it there so that when we come back and then we are picking figures for donations and grants, we will get it right. Do we understand?
Yes.
All right. Then what's the next footnote? What's the next footnote? What's the next footnote? It says what?
Rent received.
Rent received in advance during the year amounted to 20,000, while rent owned by the hospital to the year amounts to what? 300,000. It should be rent owed. Okay, rent owed, that's what they've written. Amounts to 300,000. So you see, in the trial balance, if you remember, we saw 2 rents, and the 2 rents, one was a revenue income, and then one was also an expense. Do you remember?
Yes.
Yes, sir.
Now, the one that is the income, the revenue, they are telling you that some has been received in advance, 20. So just like the development partner grant, how do you treat it? Since it has been received in advance, how will you treat it?
Would recognize it as a liability and be
So we'll first take it out from the rent received. Are you getting it?
Yes.
So let's say rent received. So go to the trial balance. Give me the rent received account first. Rent received, the one on the credit. Go to the rent. Go to the rent. Identify the one on the credit.
150.
That is how much? 150.
Yes.
Do we all agree it is 150?
Yes.
Do you agree that figure is 150?
Yes.
Let's
We are not.
confirm from here so that everybody will see. Yes,
We are
rent.
not
That
50.
is it. The revenue is 150. Is that clear?
Yes,
Now,
sir.
out of that 150, they are telling us that how much is advance?
20,000.
20 is advance. So, I don't know why my system seems to be slowing down. Okay, so we'll take the balance of 150. 150. Then you take the advance payment out. The advance is always deferred. So it will also become a liability, just like the development partner grant. That is 20, right?
Yes.
When we take it out, the rest becomes what? 130. So you recognize that one separately as a liability. So you can write liability beside it so that you don't forget. You can write liability beside it so that you don't forget. Then they said rent owed by the entity also amounts to what? 300,000, right? Yes. So if rent owed by the entity is 300,000, we are owing rent we need to pay. That will be a payable, right? Right?
Yes.
We are
Yes.
owing expense that we need to pay. So that will be a payable. Now check the trial balance. The payables itself. Do you have some in the trial balance as opening balance?
Yes. 26,000.
26,000.
The opening balance is 26,000 from the trial balance, right?
Yes.
Then the rent payable 300. You add it. So let's go to the trial balance and locate it for the rest to see. Opening balance of payables. Can you all see it here? I'm highlighting it for you. Opening balance of payables 26,000. Can everybody see?
Yes.
Yes, so that is the opening balance. And then we are owing 300 more we need to pay. So that 300 more becomes a payable. So add that 300 to it. Then the 300 itself is rent. So it will affect our rent account. So let's open rent, working 6. Let's open rent. Yes. So rent expense. Give me the balance on rent expense. The rent itself,
500.
500.
500.
Yes.
Now this expense of 500 will increase by the 300, right?
Yes.
Hello, sir.
Yes.
Please, can I know why the rent payable is 300?
Oh, if you look in the footnotes as we solved here, look at it carefully. Note 3. It said rent received in advance during the year was 20, and the advance one is a liability. But it's also telling us that while rent owed by the hospital is 300. Can you see?
My next question.
Can you see?
Okay, I've seen it.
Yeah, so that
Yeah,
is a payable. So it will increase your rent charge.
thank you.
It will increase your rent charge 300, making your rent 800. Now, about this rent expense, which expense will you recognize as it should fall under goods and services? Do you agree?
Yes,
Do you
sir.
agree that rent should fall under goods and services?
Yes.
Yes.
So open the goods and services account. Open the goods and services account, but you don't forget. So in essence, so you need to take your time, like this, goods and services. Then you enter the rent expense, which we have done in working 6, gently, and then you put it there as what? 800. And bear in mind that goods and services contains a lot of items. Is that clear? So
Yeah.
leave ample space, at least on 10 or 8 to 9 to 10 lines. It's okay. From experience, if you have been practicing the past questions, you should be able to see clearly that that account consists of a lot of things. Are you getting it?
Yes.
So we have tackled that. Are we fine? Are we
Yeah.
fine?
Yes, we
Yes,
are.
sir.
Now they are telling us that consumption of fixed capital should be this. Consumption of fixed capital should be this. Then they said land constitutes 30% of the amount of land and buildings as shown below. Then Vince said a medical equipment valued at 20,000, which is included in the medical equipment and accessories listed on the trial balance, was completely damaged due to consistent power fluctuations. And the value of this equipment should be written off. So go and check the value of equipment, medical equipment. Go and check the value of medical equipment. Go and check the value of medical equipment.
420.
420,000. And then they are telling you that an equipment valued at 20,000 is destroyed. So it should be what? Written off. Is that clear?
Yes, sir.
Yeah.
Okay. So if we are calculating our consumption, let's go up and open consumption. Let me leave ample space for this. So let me put it somewhere here. Consumption of fixed capital. So let's take them one after the other. Furniture and equipment. Now, furniture and equipment. From the question, what is the cost of furniture and equipment? From the question, what's the cost of furniture and equipment?
200,000.
200,000.
200,000. And then the useful life is how much?
5 years.
5 years. And so that gives you what? 40,000, right?
Yes, 40,000.
40,000. What is the next item there? Medical equipment and accessories.
420,000.
Medical equipment and accessories. 420,000. But they say we should write off a certain amount. How much is it? How much they say we should write off? 20,000, right?
20,000. Yes.
So minus that 20,000. And what was the useful life?
4
4
years.
years.
4 years. So that will give us 400,000 divided by 4, which is our 100,000, right?
Yes, sir.
Yes.
What's the next asset there? Motor vehicles.
Yes.
Give us the cost of motor vehicles from the trial balance. Give us the cost of motor vehicles.
120,000.
Sir,
Yes.
initially I thought we'll write off the figure before we divide it by 5.
Which figure?
The one that they said we should subtract from the equipment,
And
the
so
20,000.
so we've taken it out before we divided.
Okay.
Are you seeing the whiteboard from your end, or you can't see? My brother, can you see the whiteboard from your end?
I'm okay now, sir.
Okay, so motor vehicles, what is the cost of motor vehicles?
120,000.
So 120,000. What is the useful life of that motor vehicle?
5
5
years.
5 years. And I'll give you what?
To
I'm sorry,
24,000.
24,000. 24,000. Then buildings. Now they said land constitute 30% of the amount of land and buildings. So buildings, if land constitutes 30%, given the cost of land and buildings, so 70% will be for 70% will be for building. Yes. Land and building is how much?
300,000.
From the trial balance. The land and building is what? 300,000. All of you, can you see here? 300,000.
Yes.
But they said 30% of that is land. And then since the land will not depreciate, then the building is 70% of 300,000. 70% of 300,000. And then the building was given how many years useful life?
10 years.
10 years.
10 years. So divide by 10 years. What is 70% of 300,000?
210.
200.
210,000.
Divide by 10 years will give you what? 21,000. Right?
Yes.
Yes.
Is that all the assets that has been consumed? Is that all?
Yeah. Yes.
So if that is all, we can close the consumption account. We can close consumption account. Let us move on to the next footnote.
So,
Yes.
please, the one we wrote off, is it going to reflect in our expenses and under which category?
No, it doesn't fall in expense. It is an asset. It is an asset that you have written off your book. That means you've taken like a disposal. It's like you've disposed at a process of zero.
Okay.
It's like you sold it, but at a process of zero.
Okay.
Yes. So let's look at the next footnote. What did the next footnote say? Yes, the next footnote. Somebody should be reading for us. The next footnote.
Activity submitted.
Who is reading for us? Okay, should I be the same person reading for you?
Oh, sorry. Just let me
Yes.
read. The VI. The hospital submitted a claim of 11 million to the National Health Insurance Scheme for services provided to patients in the last quarter of 2023, but the payment has not been yet received. This transaction has not yet been reflected in the trial balance.
So, you see, the hospital, you will agree that when the hospitals run services for NHIS, they collect the money from government. Is that clear?
Yes.
They submit all the claims to the government, maybe is it quarterly or whatever. So they have made some claim. They've submitted some claim to the government, but they are telling us that 11 million of that claim, they've not yet received it. So to the hospital, it becomes a receivable to the hospital. Is that right?
Yes.
Yes.
So open the receivables account. Now check the trial balance, whether the receivables itself have some opening balances. Receivables in the trial balance, check if it has some opening balances.
Yes.
Yes.
Did you see any opening balances there? Let's go there for them to see. Yes.
65.
Where is the opening balance of the receivable we see? We can see receivables from National Health Insurance. Can you see?
Yes.
Yes.
So that is
65.
65,000. And they are telling you that 65,000, additional 11,000 was not received. So let's say 65,000. Then additional from what? NHIS, right?
Yes.
So additional from NHIS. This how much have they not received? 11, eh?
Yes.
So 11,000. Okay, so that is okay. Let's move on. The next footnote. The next footnote.
Okay. VII. The hospital took a loan of 100 million from Health World Bank on January 1st, 2023, when the exchange rate was $1 to ACD 50 pesos. The exchange rate at December 2023 is $1 to 5 cedis.
So this is what we call IPSAS-4. IPSAS-4, the effects of changes in foreign exchange rates. Very, very easy. You translate. We took a loan. When we took the loan, it was $100,000. Remember, in Ghana, we don't account using dollars. Remember, in Ghana, we don't account using dollars. Therefore, when they took the loan in January 2023, the exchange rate at that time will convert it. So let's call it foreign exchange difference. The network is slow. Let's call it foreign exchange difference. Now, the loan was taken on 1st January. So at 1st January 2023, we'll translate 100,000 at the exchange rate of what? $1 to 350 pesos. So 3.5. What would that give us? What would that give us? About 350,000, right? Is it 350,000?
Yes, please.
Then at 31st December 2023, 31st December 2023, 100,000. Now the exchange rate is what? 5 cedis. The
Yeah.
cedi has fallen. Yes. So that was for 500,000, right?
Yes.
So what's the difference between the two? Is it a gain or a loss?
It's a loss.
It's a loss, right?
Yes,
Of how much?
Yes.
A loss of how much?
150.
150,000. So that is the exchange difference. So this exchange difference, in your view, how is this exchange difference treated? In your view, how is this exchange difference treated? Yes. How is it treated? Since it's a loss, how will you treat it as? It should be an expense. Are you getting the point?
Yes.
So which of the expenses will you recognize it in? Which of the expenses? Normally, you would then recognize it as other expense. But I would advise that since it is a standard on its own, in case of foreign exchange, make it a one-line item under expense. Exactly.
Okay.
Okay.
Recognize it as a separate line item, exchange difference under expenses. Exactly.
Yes.
Okay.
All right, that's fine. Then what do we have again? The valuation of inventory, right? So let's go and value inventory. Let's go and value inventory. Let's value inventory. Valuation of inventory. Yes. Now let's look at this. Drugs. Now, drugs. So drugs, do you look, are they for sale or they are for use?
For sale.
Drugs, are they for sale or they are for, this is a hospital, so are they for sale or
For
they are
you.
for,
Yeah,
they are for resale? But even if we use it for the patient, they pay back. Are you getting it?
Yes.
So they are for resale. So we'll value it at the lower of what? Cost and net realizable value, right?
Yes.
Right. So in order for you to remember, let me put it this way. Oh, my network has started misbehaving. So drugs, let's say resale. So lower of cost and net realizable value, that becomes what? 16,000. Then what about medical consume?
For usage.
What about medical consumables?
Usage.
Why do you say usage? What are the medical consumables they are talking? The moment they use the word consumables, it means that in the course of rendering the service, they consume it. You know, in the hospital, it is not everything that is used for you that you pay. You know that?
Yes.
Yes.
Yes. So those are the consumables. So once they use the word consumables, it is held for use. So value it at the lower of cost and replacement cost. So the cost is 10,000, replacement cost is 9,000. So what will be the valuation?
9,000.
9,000.
Please, the drugs.
Say please the drugs.
Shouldn't it be
Yes.
15,000?
Couldn't it be what?
15,000.
15.
I don't get what you are saying.
You said the lower of cost and
And
Oh,
net
and I've taken the higher rather.
yeah.
Okay, thank you. 15,000. So 15,000. Also, it will affect our total. So that's 24,000, right?
yes.
Now, what did I teach you about valuation of inventory? Then that the moment you value inventory, what must you do? You have to go and value the inventory used. Are you getting it?
Yeah.
So you call it inventory used. Please watch this carefully. The moment you value closing inventory, determine how much of that inventory is used. So let's first talk about drugs. Now, for drugs, what is the opening? What is the opening inventory? Check the trial balance. For drugs, do you have any
22,000.
inventory of drugs?
22,000.
Where is the 22,000? Tell us where it is so I can highlight it.
Debit side.
The last 4 items.
Okay, so we have inventory of drugs. Everybody watch carefully. You have opening inventory 22,000. So opening inventory is 22,000. Did we purchase some of the drugs during the year? Was there any purchases of drugs? Yes, there was a purchase of drugs. If you look here, we purchased drugs 60,000. Can you all see?
Yes.
So you add the purchases. Purchases 60,000. Then now you take the closing inventory of drugs out, the closing you valued. Drugs, we valued its closing inventory in working 11 as how much?
24,000.
Drugs, for drugs
Oh,
alone,
15,000.
15.
15,000. So you take it out. So when you take it out, how much are you getting for drugs?
67.
7,000.
60 what?
67.
7,000.
7.
So 67,000. That's the valuation of drugs we have used, which we treat as goods and services. Then you do the same for the medical consumables too. You do the same for the medical consumables too. So let's look at medical consumables. Medical consumables. Yes, medical consumables. That one too, what is the opening inventory?
12,000.
12,000.
How much is that? 12,000.
Yes.
Yeah.
So opening is 12,000. Did we have purchase of office
Yes.
consumable? Yes. Also what? 80,000, right?
50,000.
So purchases also 80,000. And then how did you value the closing inventory of consumables?
9,000.
9,000.
9,000. So you take that one to out. When you take it out, what is the
83.
difference giving you?
83,000.
83,000. 83,000. So you sum these two to give you the inventory used, which you will charge to goods and services. Is that clear?
Yes, please.
What's the total? What's the total?
150,000.
150,000. So get this as 150,000. So do that. We have finished with the notes. Do that and let's go and prepare our statement. So put that down, 150,000. Have you done that?
Yes.
Yes.
Then you go and treat it as goods and services. So go to goods and services and recognize inventory used in working 12, 150,000. So let me come to my goods and services account. Goods and services. So I have inventory used in working 12, 150,000. Are we okay?
Yes.
please.
Great. So now that we finished the footnotes, we can now come to the trial balance so that the items that we've not treated, we treat them. Now, please, the advice I'll give you is that anytime you pick an item from the trial balance and you do a working on it, you can put asterisk on it or you can tick it in the trial balance to tell you that you have already worked on it. Is that clear?
Yes, sir.
Please.
Do we understand?
Yes, please.
Hello, those whose voices I'm not hearing.
Yes,
Those
sir.
whose voices I'm not
Yes,
hearing.
please.
These are the technical things you should always be listening. I'm saying that when you see any item in the footnote and you tackle, I'm coming to you. You know, I'll mention your names. I'm coming to you. Those who are quiet, yes, unmute yourselves before I start mentioning your names. I can see a lot of them. Let me start mentioning their names. Regina Otumba and then the rest. Regina Alasan Shaibu, Linda, Alasan Shaibu, Annette and Co. Unmute yourselves. Nat, Obiniwa, Prince, Susie, and then the rest. Kindly unmute yourselves and contribute to the discussion. Yes, what I'm saying is that if you pick an item from the trial balance and you do a working on it, the moment you have done a working on it, it means the figure in the trial balance will change, true or false.
True.
So if it will change, it will be better to tick it in the trial balance so that when you get there and you are picking the items, you will know that since you've already ticked that item, it means the figure is in your working. Are you getting the point?
Yes, please.
So now let's see. Government subvention. Since we are on goods and services, I don't want to be going up and down. So let's look for the goods and services there. Let's look for the goods and services there first. Yes, what are the goods and services there? Established post salaries is compensation, casual labor compensation. So contract appointment, right?
Yes, sir.
Yes.
Contract appointment, how much is the figure?
1,400.
So contract appointment, 1,400. What is the next goods and service there? Yes,
Rent.
rent. And then the rent, we've worked it already, right?
Yes.
When we get there, we'll go and pick it. Then insurance, right?
Yes.
Insurance and consultancy services. So let's take insurance. How much is the insurance? 340.
340.
Then consultancy services, 120. Consultancy services, 120. Eh?
Conferences.
What else is there?
Conference workshops.
Conferences and workshops. Okay. Conferences and workshops. How much do we have? Conferences and workshops,
4,500.
4,500. What else is
Repair
there?
and maintenance.
Office expenses is there. So office expenses. How much is the office expenses?
20,000.
20,000. Then you saw repair and maintenance, right?
Yes.
Repair and maintenance. How much? How much is the repair and maintenance?
6,000.
6,000. Is there any other thing? I think that is all.
That's all.
Okay, so the rent. Which working number did we do the rent in?
Working 6.
The rent is there already. The rent is there already.
That's working 6.
6.
And that was what? 800, eh?
Yes.
The
So
rent is there already.
The rent is already there.
The
yes,
first item.
good. So what I mean is that you recognize it, you're working 6, 800. I mean, you've worked it, so working 6,
Yes, sir.
800.
So
The
you
first
included it in the goods and services already.
We've included it already. Oh, okay.
Yes.
That's what you mean by it's there already.
yes.
Yes.
Okay. So like I said, if you tick it in the footnote, then you are aware that you've already tackled it, right?
Yes.
Okay. So what else?
Yes.
There is nothing again. So we can close our goods and services. Sum them for me. Please sum them for me. Or let's pick the rest. Let's pick the rest. When we finish, we sum them. When we finish, we sum them. Do we have other accounts up there so that we don't come down again because of the board? Let's see. Do we have any other accounts up there that we have to take? Okay, so donations and grants. Donations and grants. Let's check if there is any other donation and grant there. Donations and grant, we don't have anything there. So since we don't have anything again, then that is the value. There will not be any need to do further adjustment. So let's look at the rest of the accounts. I don't want us to go up and come. Okay, so from our revenue, if we are listing revenue, we have been listing what? Government subvention, IGF. So let's go and open IGF, which contains a lot, and then government subvention. Let's go and open them. So working 13. Let me open working 13. Yes, Government of Ghana subvention. So in your trial balance, let's look for items that are subvention. Yes, Government of Ghana subvention. It's only one, right?
Yeah, it's only one.
So there was no even need to wait for that. So okay. So IGF, let's deal with our IGF. Yes, IGF. So let's list our IGF. What are the
Outpatient.
outpatients? The network is slowing our board. Yes, outpatient. How much is it?
35,000.
What about what? Inpatient. Inpatient. What do we have? 40,000.
40,000.
Apart from that, what do we have again?
Pharmacy sales.
Pharmacy what?
Sales.
Pharmacy sales. Mm-hmm.
180,000.
Pharmacy sales, 180,000. What else?
Diagnostic.
Diagnostic. How much is that? 85, eh?
Yes.
Apart from diagnostic, what do we have?
Mortuary services.
Mortuary. Mortuary is how much?
9,400.
9,000.
400.
9,400.
Yes.
$9,400. What else do we have?
Cafeteria and canteen.
Cafeteria and canteen. When the network fluctuates like this, it affects the board. Cafeteria and canteen. What do you get?
4650.
4650. Please, are you checking the figures, whether he's mentioning the right figures?
Yes.
Yes,
Yes, sir.
After that, what do you have?
Extension services.
Extension services, 14,000, eh?
500.
500.
Extension services, 14,500.
500.
Then the next thing is what?
That's all.
Okay. So now look at some. You see the NHIS receivable. Do you know it's an IGF for them?
Yes.
Good. So the NHIS that they've not received is a revenue for them. So NHIS receivable, I think it was in one of our workings, and it was 11,000, right?
Yes.
Then the rent receivables too, since it's an income, it's IGF. The rent,
130.
how much was the rent received? When you took the advance
130.
out, it was left with what? 130, yeah?
Yes.
sir, but don't we have receivables itself so that we can group
No,
this receivable under that?
not the receivable one, the one that you've actually received. You see the rent. Watch this. Let me go to the travel line. Where is the rent? Rent. You see that we have 150, which is a revenue to us. Do you remember?
Yes,
Yes.
sir.
And out of that 150, they said it seems 20 was advanced. Are you getting it?
Yes.
Yes.
So that 20 was a payable, which we took out. But the 150 is a revenue to us. So we need to add it to our IGA. Are you getting it?
Okay.
After you've taken the 20 out, the 130 that is left, watch here. My
So,
brother, do you understand what I'm saying?
Okay. So it means that this money is more of the receivables. The one I'm talking about is more of it has not even come at all. But this one is more of it's likely we have even received it, right?
No, listen. The receivable one was rent that we've not received. That is receivable. But here
Yes.
it is a revenue to us. And then we have rather received the revenue in advance. We've received more than necessary. Some is there, which is advance. Are you getting it?
Yes.
Do you get it? So the advance one, you take it out and then it becomes a payable. But if that becomes a payable, at the end of the day, we still have rent that we've received of what? 130, which is revenue to us. Are you getting the point?
Mm.
Do you understand it now?
Yes.
Okay. So we've done IGF, we have Government of Ghana subvention, IGF, we've gotten donations and grants. Now let's go to the expenditure. Let's go to the expenditure and deal with it. Compensation of employees. Let's deal with compensation. So let's go to working 15 and deal with compensation. Yeah, so working 15. Let's deal with compensation. Compensation of employees. Let's go to the trial balance and take all the compensation there.
Established position,
Established post, how much?
62,000.
Please, are you confirming the figure she's mentioning?
Yes.
The established post is 62,000. Yes.
Casual labor, 5,000.
Casual labor, how much?
5,000.
Casual labor, 5,600. What else? What else? Limited engagement.
Engagements.
Some people's limited engagement.
That means that they are people whose work are limited, like trainees. Are you getting it?
Oh, okay.
We have hired them as staff, but their work is limited to a certain area. Yes, limited engagement.
200.
200.
Yeah.
Is that all? I think that is all.
Yeah.
So
So we've gotten compensation, we've gotten goods and services, we have consumption already. Yes, interest is in the trial balance. So I think we can prepare our statement, right? Since we've gotten this, we can prepare our statement, right?
Yes.
Okay, so let's go and close the other accounts. Let's close them from the top. If there is any account we need to close, let's sum them and close them and prepare our statements. So I'm beginning from the top. Everybody should pick his calculator and help me close my accounts. Yes. So the payables. What is the total?
26,300.
Please help me close the account. 26.
300.
Let's close all our accounts and then balance it off. Goods and services, please add them for me. Sum them for me.
So, but
183,
the deferred rent, how are we?
It's a liability, like I said. I explained to you that it's a liability. So that is statement of financial position.
Okay, I thought, okay. I thought we're adding it to the payables though. Okay.
Normally, those ones treat it as a line item.
Okay. All right.
Yes.
183160.
18.
3160.
160.
183160.
160.
Okay. Consumption of fixed capital. Help me.
185,000.
185,000.
185,000.
The total is 185.
185,000.
Yes.
Okay. But consumption of fixed capital. Please kindly check up again. What's what I'm saying here?
Yes, 185,000.
185,000.
Yes.
Yes.
1400 2021. So
When this internet slows down. Okay. 185,000. Let's move on. Yes, receivable.
76,000.
And then there was one in the trial balance. There was another. The trial balance, if you take your items, there was another receivable there. Receivable from patients, 15,000. Can you see?
Yes.
Can you see?
Yes, please.
Yes.
Oh, this network might affect. Oh. This sum it for me.
91,000.
91,000. Okay, so we balance all this. IGF. Balance IGF for me. Find the total of IGF for me.
Three seven nine
37,680.
680.
37860. 37.
379
Uh-huh.
680.
3680.
680. Okay. Compensation of employees.
67,800.
Okay, so let's prepare our statement of financial performance. So what is the name of the hospital? Hamlet Teaching Hospital. Okay, so let's take our revenue. Yes, revenue. Government of Ghana subvention. Yes, from your, please, do you know what? Take screenshots of the notes. Take screenshots of the notes so that you mention it for me, so that I won't go up and down. But the network is disturbing my board. So those who have been taking the screenshots, I'm going to the top for you. Take screenshots of the notes so that you can mention them for me. Exactly.
Okay.
Yes, I'm starting from the beginning so that you take notes. So you can take it from working too. Take them so that when I get there, you mention them for me. Are you done?
No.
Yes.
I mean, take screenshot of this so that when we finish, we'll look at everything. But because I want to move up and down the board, take screenshot so that you can mention it for me. Have you taken this one?
Yes.
Yes, please.
Where should I start from? 5, yeah?
Payables. Yes.
Payable.
So take this. Are you okay?
Yes.
Take this. Are you okay?
Yes, please.
Take this. Are we okay?
Yes.
Take this. Can I move?
Yes, please.
Take this. Can I move?
Yes, please.
Take this. Can we move?
Yes, please. You can.
Okay, so take this and then we go and mention for us. Are you okay?
Yes.
Yes, yeah.
Okay. So Government of Ghana subvention, what did we get for it?
100,750.
750.
That's note what?
13.
No,
13.
13.
Then internally generated fund, IGF. Internally generated fund.
Note 14.
14.
What's the figure?
37.
3768.
680.
37.
379680.
Okay. Then donations and grants. Donations and grants.
Workings 3.
No, 3.
9600.
9,600. Is that all?
Yes.
So this is all. Let's go to the expenditure. Let's go to the expenses. Yes, compensation. What do we have for compensation of employees?
6,800.
Notes.
15.
15.
And the figure is what?
67800.
6,780. Let me go up a bit. Yes, goods and services.
Goods and services.
18316.
Give me the note number.
7. Need
7.
7.
And the figure is
183 160.
183
160.
160. Okay, that's goods and services. Then consumption of fixed capital.
Note 8. 185000.
185.
000.
Yes. Interest. So the interest was in the travel allowance. Interest was in the travel allowance. Interest on loan, 10,000. Can you see?
Yes, please.
Please, can you all see it from the travel allowance?
Yes.
Yes.
You see it, interest on loan, 10,000. Okay. Then the foreign exchange difference.
150,000.
150. Note 10.
Okay.
Oh,
Note 10.
wait.
Foreign exchange difference. Note what?
10.
10.
Yes.
150,000.
Do we have any other expense there? The last item in the travel allowance.
Yes, other expense.
Other expense.
13,000.
So sum them for me. Let me go up. Yes, sum the revenue for me. Sum the revenue for us.
490
490
030.
490,030. So that's the total revenue. That's total revenue. Then sum the expenditure to for us. Give us some of the expenditure. What's the expenditure?
608,960.
6
08.
08.
960.
So the 608, not 6008.
$608,960.
Yes,
Yes.
please.
I'm gonna write it well. My network is not so favorable. So that's the total expenditure. This my network. Yeah, so do we have a surplus or a deficit?
A
A
deficit.
Deficit.
So deficit of how much?
11898.
118.
930.
Okay, so that's the deficit. So let's create our accumulated fund. Let's get our accumulated fund. So,
Sir, please question.
yes,
Is there any chance that the accumulated fund could be at the debit side?
yes. If it's debit, then it means it's negative. Do you get it?
And what does that mean? That they finance their operations via loan or what? I just want to understand.
No, what it means is that accumulated fund has run into it. When company continue making losses, you get it.
Okay. Okay.
When you continue making losses, the accumulated fund will run because you know the opening balance. We've always been adding the surplus or deficit for the year.
Yes.
So if you continue making losses, it will definitely run into negative.
Okay.
So what is the accumulated fund balance in the trial balance? 336.
336,200.
Yeah.
Oh, this is my network. Then the deficit. So what are we getting? What are we getting?
Two
Yes.
17280.
2 1
17280.
Okay. So let's prepare our statement of financial position. Hey, Ghana network. Okay, so non-current assets. Property, plant, and equipment. Let's go to current assets. Okay, so the inventory, we worked it in working number what? Inventory, please give me the note number and the figure.
I think 11.
11.
24,000.
11, 24,000.
Yeah.
Okay. Then receivables. Receivables. Receivables.
Working
What's the figure?
91,000.
Working number what?
9.
9.
Oh, okay. No, with this.
Now, check through the trial balance. The bank and cash, how much is it?
30,000.
You should always check whether it is on the debit or the credit. Is it on the debit or the credit?
Debit.
Debit.
So it's physical. If it's on the credit, then you should know it's overdraft. Is that clear?
Let's see.
Okay. So that will be total assets. Let's go to liabilities and funds. Liabilities and funds. Check through the trial balance. Was there any loan? Yes, loan from foreign institutions. How much?
350,000.
Loans. It was 350,000. But there was a note on it.
Yes.
So the note is the exchange expense. So you see, it was 500,000. But at the end of the year, look at the foreign exchange difference. At the end of the year, the loan became what?
It was 350 to 500.
350.
Good. So, you know that it's an exchange difference. It will affect it exactly.
Yes, sir.
That's working number what?
10.
I'm putting foreign exchange so that you remember that it is in the foreign exchange.
Okay.
Working number 10, and then the figure is what? 500,000.
500.
Is it 500 or 500,000?
500,000.
100,000.
Okay. So accumulated fund. Yes, accumulated fund.
Two 17280.
This is my network. 217.
280.
That's accumulated fund.
Yes.
Then, yes, what do we have? We have the payables and all that. So payables, what did we get? Then the advance
26.
rent. Payables is how much?
26,300.
26.
300.
300.
Let me go up a bit. Yes, is that payables or 26?
300.
300. What about the advance rent? It was 20, yeah?
20,000. Yes.
You know, that was what's in the footnote. You're already working 1,000, so 20, right?
Yes.
Then the grant, the deferred one, the deferred grants.
Yes.
The deferred grant was working about.
2.
And what was the figure?
6,400.
So let's do PPE. Let's do PPE so that when you have time, you can balance it. Let's do PPE. Yes, how many workings have we done so far? The workings, we ended on working number what?
15.
So let's go and do 16 PPE. Let's go and do 16 PPE. Hey, Ghana network. So far. So PP, so please list all the assets there for me. Mention them one after the other, the assets. You have
Furniture.
furniture.
And fittings.
This thing is so frustrating. Furniture and what?
And fittings.
Is it fittings or office equipment?
Office equipment.
Office equipment.
Then the next item there is what? Medical equipment, eh?
Yes. And accessories.
Medical equipment. Then the next thing we have is what?
Motor vehicle.
Motor vehicle. Then the next one is what?
Land and building.
Land and building. Okay, so give me all of them, their costs.
Furniture and office equipment, 200,000.
Furniture, okay, 200,000.
Yes.
Well, medical equipment.
420,000.
Motor vehicle.
120,000.
The land and building.
300,000.
Was there any addition or disposal? There was a disposal, right?
Yes.
The disposal was on which one? I think medical equipment. And it was 20,000, right?
Yes.
Right?
Let me confirm.
So the cost will give us how much?
Yes, 20,000.
So this is 200,000. This will give us what? 400,000, eh?
Yes.
And this is what? 120. What about this? 300.
Yeah, right.
Okay. Then let's talk about depreciation. So the consumption of fixed capital. That one, what was the accumulated? The opening balances.
40,000 for the
For
furniture.
furniture and fittings were 40,000.
Yes.
What at all is this? 40,000. What about medical equipment?
120,000.
Medical equipment was what?
120.
120,000. What about motor vehicle?
20,000.
What about land and building?
70,000.
Okay. Then the one for the year, the addition.
Yeah.
Now bear in mind that the addition you are writing here is the one for the year.
Yes.
What is this?
Mm,
Addition. Give me the figures.
40
Equipment, what did we get?
40,000 for the furniture.
What about medical equipment?
100,000.
What about motor vehicle?
24,000.
Then the land and buildings. I think we
20.
got 21,000. Right?
Yes.
So let's add them and get the total for the consumption. Yes, what are we getting here?
One
This is 80,000. And this
220.
will give us 220.
20,
This will give us
4, 44,
44.
91.
Okay. So the carrying amount.
120 for the first one.
$120,000.
Yeah.
Let's exercise them bit by bit. The network is slow, so bit by bit we'll go.
Mm. 76.
120,000. And then this one is also what?
180,000.
180,000. What about this?
76,000.
76. 76,000. And then what about this?
209.
209.
Yes.
209. No. So add on, and let's see. Add on, let's get
585. 585,000.
585,000.
Yes.
Okay, so let's go and put it there then. This network, I have to consider changing my network. Let me get a more sophisticated internet access, more robust one. With the Kesaka is delaying to. That's 585, eh?
Yes, 585.
It's my network. Very seriously. Hey, Ghana. Okay, so check if you balance. Check if you balance. What's the total here? What's the total for the assets?
730.
730. And what about the liabilities and funds?
750.
750. Oh, so there's a difference of 20,000. Where is it coming from? Where is that difference of 20,000 coming from?
So please, can we go back and sum the goods and services? No, I'm not sure about that really.
The goods and services figure is correct. Let me check from. Let's check. Oh, what is happening to us? Let's check from our solution here.
Check on the IGF.
Let's check our solution here. Let's check the solution here. Government subvention.
Please, can
Government
I be
subvention.
from there?
Government subvention. Did you get 100, 750?
Yes.
Donations and grants. Did you get 9,600?
Yes.
IGF. Did you get 379,680?
Yes.
And then compensation. Did you get 67,800?
Yes.
Goods and services. Do you get 183,160?
Yes.
Oh. And then consumption of fixed capital. Did you get like
No,
5,000? What did you
no.
get?
We had 185,000.
That means it's coming from there. Oh, my network is not even favoring me at all. What is this?
Yeah, let me take my screenshot before it goes. It will go.
Regina.
Yes.
I'm coming. Let it come and let's see.
It's goes off.
Let it come. Let's take screenshots and then probably later we'll correct ourselves. So that 20,000 is coming from there.
Yes.
Okay. Finance interest. Did you get 10,000?
Yes.
Foreign exchange difference. Did you get 150,000?
Yes.
Other expenses 13,000.
Yes.
Oh, so then it's coming from there. Then it's coming from the consumption of fiscal. Then consumption of fiscal capital, where did we make a mistake?
The difference is 20,000.
Yeah, so that's where it's coming from.
Hello, sir.
Yes.
Please, could it be the disposed asset that was
What was
added to the
what was the cost of the disposal asset?
20,000.
20,000.
It was 20,000, but 20,000 has the cost. So it is disposed to be taken out. So I don't think it's coming from there. No, but in their own working, they got a 585,000 for they got 185,000 for the consumption. So how come? Okay, they've written something here. Under it, they said it has been assumed that the medical equipment that has been destroyed was acquired during the year, and therefore no accumulated depreciation prior to that. However, all other assumptions such as prorated since acquisition was silent on the total. And the total amount in respect of consumption of fixed is comprised of damaged equipment written off and charged for the year. So I don't know. Well, that is I'll take a look at it. Let me see. Let me give you the whole question and take your screenshots. After all, that one will not even it will not even amount to 1 mark. Sometimes I see questions like that. Sometimes there is a controversy.
So I think we didn't charge the 20,000 to the P&L. When we disposed of it, I think maybe we should have written it off, maybe, I don't know, in the expense sheet so that to reduce our profit. So would have.
Okay. Yes, this is what it actually means. Yes, I get you. You are right. Once we've written off that 20,000, the assumption is that it is destroyed. So the assumption is that everything has depreciated. So we should have charged it to the compensation, to the consumption. Do you understand?
Yes, sir.
Yes, it is right. Once we've written it off, it is destroyed. So it's assumed that it has outlived its useful life. So the whole thing depreciated. Are you getting the point?
Yes, sir.
Please, do we understand?
Yes, please.
So charge that as part of consumption. Oh, I want this board to come for you to take your screenshots and please, have you written down the solution? Have you written down the solution?
Yes, sir.
Who has written down the solution? Who has written down the solution?
I've written it.
So then we'll fall on you to give a screenshot because from what I'm seeing on the board, look at what is happening. If I try to move, the network is slow. So what I've done previously is now reflecting. Are you getting it?
Yes, sir.
So we'll fall on you to give us the screenshots.
Okay.
Have you taken everything from the workings to the statement?
Yes, please.
Yes, so please then share the screenshot immediately on the page. Share it immediately on the page so that your colleagues can get access to it. Or colleagues, will you want me to solve it comprehensively and then throw it to you on the page? Hello?
Hi.
The network is not favorable.
That'll
I'm
be
saying,
fine as well.
will you want me to present it in a book and then give you the screenshots?
Yes.
Yes, please.
Okay, I'll do that. But for the meantime, I think you have gotten the explanation to the solution. So I'll do that. I'll throw the solution. I don't know. The network now is not favorable at all. Let's manage it. So we have no choice than to end here. So I would like to bring the session to an end so that I'll prepare the solution and then throw it to you. Let's manage it gradually. So in our next meeting, we'll start with, analysis and discussion of the financial statement interpretation. Exactly.
Yes, sir.
Okay, so
That will be next week.
we'll meet again next week. Till then, may God guide and protect all of us.
Amen.
Good day.
Friday.